So, hi everybody, this is Hustle Hub. I'm Giacomo, and today I'm going to analyze another stock that you frequently ask me to analyze. This is Broadcom. Before we get into the video, a few disclaimers. First, this is not financial advice. Do your own research. And second, the data that I've taken comes from New York University website, the part managed by Aswat Damodaran and Seeking Alpha. If you want, you can get a discount on the Seeking Alpha subscription, link down below. So let's get into the valuation of today. First, we start by making some assumptions. First, we start by making the assumption of estimating the weighted average cost of capital. We start off by the two components of the cost of capital. Those are the cost of equity and the cost of debt. So as a reference, I've taken the interest rate swap for the next 10 years because I've evaluated, I've run the DCF on the expected growth of the free cash flows for the next 10 years, and then I've calculated the terminal value. But yeah, I wanted to use a reference that is quite good for the next 10 years. And the interest rate swap for the next 10 years is around 4%, and I think it's a good reference. Second, I've taken as a reference the risk premium indicated by Aswat Damodaran in one of his latest spreadsheets, and for the United States the risk premium was around 4.6%, so I've used it. Here we have the beta for the last 24 months, and I've taken that as a reference. It is indicative of what we can expect in the future, but as I said, the cost of equity is given by the beta, the future beta. Of course, we don't know the future, but we try to predict it by watching at what has happened in the last 2 years. So yeah, I've taken these figures as a reference. Then the cost of debt, as I said before, I've used as a reference the interest rate swap, and then the spread, I've put it around 2.5%. We can also put it at around 3 just to stay conservative. And yeah, we see how it affects the cost of capital, because over here the debt to capital ratio is around 45% debt and almost 55% capital equity capital. So yeah, these are the assumptions for the cost of capital, and I've made a few different ones for the medium and long term because it's widely expected for the rates to go down from now on. The Fed is expected, a lot of commentators expect the Fed to at least make one cut this year. So yeah, we take that into account. Here's some highlights for the revenue in the last 10 years. We can see that the revenue has not grown really that much as other semiconductors company, but probably this new demand, especially in the artificial intelligence, could generate some growth. But we can see that the earnings have grown quite a lot, and the free cash flow, probably because the margins are getting better and better. So here's some estimates that we make for the future from now on. We start off by making an assumption for what could happen from now to the end of the year, and then we make assumptions year by year. So I've used the short term for 2026 and 2027, and then the medium term for the rest of the free cash flows until the last year, and then the long term for the calculation of the terminal value as a reference for the perpetual growth. And I've used it at a rate around the GDP because corporate finance lessons, they always tell you to stay conservative on the perpetual growth and put it around at the expected growth rate of the GDP. So yeah, here's the explanation. Here's the explanation of why I've taken these figures as the assumptions for Broadcom. We can see how the free cash flow. We expect to see the free cash flow going from now on. And yeah, then we calculate the terminal value. Here's the formula for you to see. And then we have the present value of that terminal value. We add the free cash flows and the terminal value, and then we subtract a few things that could dilute our value, especially our position in the equity of Broadcom. Here we see the debt, the net debt position, there is $64 billion. And then we see the restricted stock units that is given as a bonus to the management. These are 22 million, and I've calculated the value by multiplying this 22 million by the current share price. And yeah, so then here's the value, the estimation of the value of equity, and then we divide it by the outstanding shares, and we can see that there's definitely some margin. It would probably make it a buy as of now. And yeah, okay, so maybe we can make a few changes in the assumptions just to, stay conservative. I have to say that these figures are before the stock split, so yeah, you have to consider it as it was before the stock split, and probably you should simply divide the value by 10, and yeah, we could see the difference. So now the stock is trading at around 100. Yeah, pretty much the same, considering the stock split. And yeah, so there's definitely some value in the stock price. As I said, consider both of these figures as if maybe we can do it right now. We basically divide it by further 10, and now the stock is around 155. So yeah, we can see how the value changes, but the basics are still there. So there's definitely some value into Broadcom given the assumptions that we have made. And yeah, maybe we can make a few changes. We can see what would happen if the beta would go higher than what it has done. For example, it would increase the cost of capital, but still it would give us a pretty good margin. We can see what would happen if the rates were not to go down as we would have liked, and still there is some margin, and then we make an assumption. Let's say it's around 15%. Still, there would be some value in it compared to the current share price. So yeah, I think that Broadcom is a pretty good value. I personally like the stock, and I like the valuation, not as high as many other semiconductor businesses such as Nvidia, AMD, and so on. So probably it would make for a pretty good deal. So yeah, I think investors should take a look at Broadcom and see if it would fit their portfolio. So this is it for today. I hope you enjoyed the video. Make sure to like, subscribe, and comment for the next stocks you would like me to have me analyze. And yeah, this is it for today. I'm Giacomo. This is Hustle Hub. See you next time.